What type of investment account should I open? That is a question I get a lot here on this channel, so let's discuss it. How's it going, everybody? I hope you're doing well out there in the land of the internet. I am Mike the CPA, and welcome back to Money and Life TV. This is a channel people come to learn about finances, investing, taxes, and so much more. In a previous video on this channel, I showed you step by step of how to open up a brokerage account from scratch and purchase your first stock or ETF. Now, many of you got excited and realized you should be investing as well, or you're considering investing. But when you actually go to invest and open up an account, you'll quickly realize there's a lot of different accounts. Almost as many different accounts as there are versions of Disney's The Lion King. And just so you guys know, Chipper wanted the 4K Ultra Edition because that bird likes everything in 4K, and it's really expensive. Before you can decide what investment account to open, my advice would be to first understand the different types of accounts and how they work. Then compare that to what your overall goals are and what you're trying to accomplish with your investments, and that's going to help you then pick what type of investment account you should open for yourself. Now, personally, we're going to discuss what I consider to be the four main investment account options you have. The first one is a standard brokerage account, it's also known as a non-retirement account or taxable brokerage account. The second one is a traditional IRA. The third account we're going to discuss is a Roth IRA. And the fourth most common investing account I find is a 401k plan, which you normally would invest through with your employer. There are more investment accounts than that, especially for business owners, but we're not going to go into that because that can get far, far too complex for what most people's needs are. Now, I love hearing other people's opinions, other people's stories about this kind of stuff, of what account do you feel works for you and why. So leave your opinions, your thoughts in the comment section down below while we go through the video. To help us determine which investment account to open, I've put together a table of over 10 different important factors that I think you should consider before choosing an investment account for yourself. At the end of this video, I'll discuss which accounts I use and why. The first factor is pretty obvious, but it's where the account is held or how do you open it. Well, for a standard non-retirement taxable brokerage account, you can open that personally by yourself online or by going to a brokerage firm such as Merrill Lynch, Vanguard, Fidelity, etc. The same can be said for a traditional IRA and a Roth IRA. Now, your 401k though, that is going to be with your employer. So if you want to use your 401k, you strictly are doing that through your employer. You can't open up your own separate 401k unless you have your own business, and that's a whole nother story. So that's the first thing, is to understand how you go about opening them. And the first three we're looking at on the table, you can do yourself from home just by using the internet. I think the next factor to discuss, and it's a really important one, is taxes, is understanding how taxes affect your overall returns on your investments, because they can really add up over time. And so with a standard brokerage account, there are no tax advantages to it. So basically, if you earn dividends or receive dividend income, whether or not you receive that in the form of cash or you reinvest your dividends, you're still going to have to pay taxes on that. If you sell a stock or an ETF or whatever at a gain, you're going to have to pay taxes on that. Now, so there's not a lot of tax advantages for a standard brokerage account, but I will tell you one thing that's very important, is that this is the one account where if you do lose money, so if you sell an investment at a loss, that loss can offset your other capital gains. And you can take up to a maximum of a $3,000 loss every single year. Now let's talk about taxes for a traditional IRA. Do you get a tax deduction when you contribute money to a traditional IRA? Yes. So right now, if you're under the age of 50, in 2019, you can get up to a $6,000 tax deduction when you contribute money to your traditional IRA. But you should also know and understand that if you want to trade investments within that account, or if you sell investments at a loss, you're not going to have any sort of tax deduction on those investments. You get no benefit if you lose money. But also, if you sell investments within that account though, you're not going to be taxed as well. Now let's talk about a Roth IRA. The Roth IRA, when you contribute money to a Roth IRA, do you get a tax deduction? No, you get no tax deduction whatsoever. But because that money has already been taxed through your wages or through your business income or other sources of income that have already been taxed. So no tax deduction, but when you take money out later on, you eventually get that money out completely tax-free. So that's the same as a traditional IRA. If you sell investments at a gain within your IRA, within your Roth IRA, there's no tax effect. If you sell investments at a loss within your Roth IRA, there is no tax effect. So remember, the only time you can deduct taxable losses is in a normal standard brokerage account. I just wanted to make that crystal clear for you guys. Now let's talk about the 401k. You can get a tax deduction when you contribute the money to your 401k. Yes, it will defer that tax to a future date and time when you take the money out. So you get that tax deduction. I think it's up to $19,000 in 2019 if you're under the age of 50. Just like a Roth IRA or traditional IRA, if you sell an investment like a mutual fund in your 401k and you lose money, there's gonna be no tax benefit for you. You just lose the money. So we just talked about tax deductions and the basics of how they worked. Now let's talk about when taxes are paid on these accounts, when you actually have to pay tax. Well, as I mentioned earlier, for a standard brokerage account, you pay taxes when you receive dividend income or when you sell investments at a gain or a loss. There's a tax consequence for those transactions. In a traditional IRA, you pay taxes only when you take out the money. That's known as a distribution. So usually you can't do that until you're much, much older, but when you take a distribution out of your account, you're gonna get a form called a 1099-R, and that's when you're gonna pay tax on that money. Going over to the Roth IRA now, I love this one. You're gonna pay no tax. Even when you distribute the money out of your Roth IRA account, remember, you've already paid tax on that money before you ever put it in. And you got no tax deduction when you put that money in your account. So now that money's coming out tax-free. Now let's talk about the 401k. With the 401k, just like the traditional IRA, now the traditional IRA and the 401k are very, very similar in terms of taxation. So with your 401k, when you take the money out as a distribution, usually when you're much, much older, over the age of 59 and a half, hopefully, that's when you're gonna have to start to pay tax on that money. If you wanna learn much, much more about taxation and how that affects your investments, I really suggest watching this video of how capital gain taxation works. I think you guys will find that really helpful, and I have a free spreadsheet or handout you can download to help you learn and remember all those rules. The last thing I'm gonna say on taxation here, guys, is that, within your Roth IRA, your 401k, and your traditional IRA, all that money, the Roth IRA comes out tax-free, but the 401k and the traditional IRA, when that money comes out, you pay ordinary income rates, or whatever your marginal tax rate is. For those two accounts, the 401k and traditional IRA, there's no special capital gains rate. So one nice thing of the standard brokerage account, just to give you guys the distinction between the different accounts, is that with your standard brokerage account, if you hold an investment long enough, whether it be, if you get paid dividends, they could be qualified dividends, which will give you capital gain rate treatment, which is a lower tax rate. And when you hold an investment for more than a year in your standard brokerage account and you sell it, you also get the capital gain rate treatment, which is a much lower tax rate. Remember, your traditional IRA and your 401k don't get those advantages tax-wise. When you take money out of those accounts, you're gonna be taxed at the same rate that we are taxed on our wages when we collect money from our paycheck. It's at ordinary income rates. Huge distinctions, very important to understand. So I hope that makes sense. Okay, so with these different accounts, what tax form will you get? Well, with a standard brokerage account, you're gonna get a 1099-B from your broker. It's usually gonna come about mid-February or late February of every single year. And so that, when you get that 1099-B, if there's interest income, dividend income, capital gain income, whatever, that has to be reported on your tax return. Now, let's go over to the traditional IRA. With a traditional IRA, you're gonna get a 1099-R. That's the statement you get. Now, you're not gonna get that though until the day comes, or the year comes, when you actually start taking distributions out of that account. And you tell the custodian when you wanna do that. So until you do that, you're not gonna get any tax statement at all, okay? Unless there's other special circumstances where your income's really high, then you might get some sort of statement. but it's mainly for informational purposes and not so much for anything you have to deal with in the current year for your taxes. Now for your Roth IRA, when you take distributions, you're also gonna get a 1099-R. You're saying now, wait Mike, wait a minute, didn't you say I don't have to pay tax on that money? Yes, that's correct, but you're still gonna get a 1099-R for your Roth IRA. It's gonna say that the income is not taxable. You're still gonna report that income on your tax return, but you're gonna see that it's not taxable. Now with your 401k, how does that work? Same as with a Roth and traditional IRA. When you take distributions, when the day comes when you start taking money out of that account, you are also gonna receive a 1099-R for your 401k. Okay, now let's talk about contribution limits, because this one's really important in my opinion, and it's really important to understand. So for a standard taxable brokerage account, there is no limit of how much money you can put in there. That is a huge advantage. So however much money you can make and you can save to invest, you can put millions in there if you want. If you have that money available, you can put as much as you want. For a traditional IRA, the maximum amount you can put in every single year, depending on your age right now in 2019, is between $6,000 to $7,000 per year. The same is true for a Roth IRA. $6,000 to $7,000 per year right now is the max you can put in depending upon your age. Now your 401k, what about how much can you contribute to that each year? Well, depending upon your age, you can contribute in 2019 anywhere from $19,000 all the way up to $25,000 in this current year. And those numbers usually get adjusted each year or every few years. It usually increases the max amount you can contribute to your 401k, to your Roth IRA, traditional IRA, etc. But your brokerage account, your normal taxable brokerage account, no limits. Okay, this one's huge, guys, is investment choices. It's really important to know what investment choices you have. First of all, if you want the whole gamut, the whole buffet for your portfolio, the standard brokerage account is the way to go. You can buy stocks, mutual funds, ETFs, you can trade options, you can sell short. There's other things you can do as well. But you can do all of that within your standard taxable brokerage account. What about with your traditional IRA or your Roth IRA? You can't do as much. So with your traditional IRA or Roth IRA, you can buy stocks, you can buy ETFs or index funds, you can buy mutual funds, but it is very unlikely that you're going to be able to sell short or to buy or do like puts and calls and options and that sort of thing. It's very unlikely that you're going to be able to do that within that type of account. There might be some exceptions to that, but if you want to be an options trader, then I think the standard brokerage account is where you're going to want to do that. What about with your 401k? What investment choices do you have there? Now, I will tell you that for the most part, this is probably the most limited investment choices that are available to you, is the choices within your 401k. Many employers only offer mutual funds or maybe index funds or ETFs. I've never seen a 401k where somebody can purchase individual stocks unless it's like the corporate stock of that company, like a really large company like AT&T, PG&E, IBM, or a company like that. You know what I mean? But as in terms of like buying Apple stock, Microsoft, and all this, you're not gonna have those sort of options. At least I've never personally seen it. You're usually stuck to mutual funds within your 401k. So knowing what investment choices you have in each account is very important, because you're going to want to know, based on what goals you have, you want to know what type of investments you're going to need to accomplish that goals. So that's why it's very important to understand, what type of investment choices you have within these accounts. Real quickly, let's talk about fees. In your standard brokerage account, usually the only fees you're going to pay is when you make a trade or place an order, like if you buy a stock, or if you sell a stock, there's usually a fee. I mean, if you do it through Robinhood, which is a free investing platform, you're not going to pay any fees at all. So in terms of fees, your standard brokerage account has some of the best fee options available, because there's virtually none. There's hardly any at all. Now, if we look over at the traditional IRA and the 401k, it functions very similar to a standard brokerage account in terms of fees. It's usually just if there's a fee when you place a transaction or sell a stock. The heavy hitter of fees is actually your 401k. So because there's employer or plan administrative fees you have to pay, And usually you're confined to mutual fund investments, which have fees attached to them. So you're very restricted on avoiding fees. You're pretty much stuck paying whatever that fee is within the plan, and that is one of the disadvantages of using the 401k. So in terms of the highest fees, I would say your 401k is going to have the highest fees, and your standard brokerage account or your Roth IRA or traditional IRA is going to have the lowest fee options for you, depending upon what type of investments you pick. Let's talk about penalties now. Are there penalties for a standard brokerage account? No. That's one of the best things about a standard brokerage account is that you're not restricted of when you want to take your money out. There's nothing stopping you. So you can take your money out whenever you feel like it, which is really nice. So there's no penalties that I'm aware of that you need to worry about in your standard brokerage account. Now in your Roth IRA though, or traditional IRA, things like that, there are special rules, there's restrictions, so penalties can apply if you take out the money too early. If you're under the age of 59 and a half and you're pulling out, not only are you pulling out what you normally originally contributed, but you're also pulling out earnings and you're under the age of 59 and a half, well, you're gonna be hit with some penalties, some taxes, whatever it may be. So you have to look out for that. But I'm not gonna go too deep into those rules in this video. For your 401k, the same thing applies. Very similar to a traditional IRA and a Roth IRA. If you're under the age of 59 and a half and you pull money out early, just for any random reason, there are exceptions to penalties. There are cases for all these accounts, for your Roth, your traditional IRA, and your 401k, when you can take money out penalty free, but you really have to look into those rules. But generally speaking, if you'd randomly just take money out of that account before you turn 59 and a half, you're gonna be hit with some pretty hefty penalties. Usually it's about 10%, and it hurts bad. Okay, what types of investing can you do in these accounts? Within your standard brokerage account, you can virtually do any kind of investing you want. You can trade stocks if you want to be like a day trader or swing trader. You can be a long-term investor if you want. You can do puts and calls and sell short. You can buy options, all that stuff. Over in your Roth IRA now and your traditional IRA, you're not going to be able to do all that. So with your Roth IRA and your traditional IRA, you can trade stocks if you want, as much as you want. You can do that. That's fine. But if you want to, you can be a long-term investor if you want, that's fine. You can be a dividend investor, that's fine. But if you're trying to do options, sell short and all that kind of stuff, that's probably not going to fly. So you're probably not going to be able to do that. Within your 401k, you can, generally that's meant for a long-term investor. However, if you want to trade in and out of your mutual funds within your 401k, you can do that if you want to. But you're not going to be able to access options, sell short, and things like that within your 401k. You're typically stuck being a long-term investor. Now, a lot of people love dividend investing, so I'm just going to mention this real quick. In all of these accounts, you can invest for dividends. However, the 401k though, it's kind of hard to do that because you're stuck with mutual funds and you have to pay, which are usually loaded with fees. So the yield from your dividends is going to be hindered by those fees. So I don't think a 401k is really designed for dividend investing. If you want to do dividend investing, I would do it in a Roth, traditional IRA, or a standard brokerage account, whichever you prefer. Now, what if you want to take a margin loan? There's some investors who are really big on taking margin loans, borrowing money from the broker and investing it to try to do quick swing trades or day trading to add to the volume of shares they buy each time. Within your standard brokerage account, yes, you can take a margin loan. What about in your Roth IRA or traditional IRA? Generally, no, you're not going to be able to take any sort of margin loan debt. So just know that. What about from your 401k? Can you take a margin loan? No. What about other types of loans? We all have heard of the 401k loan. Well, you can loan or borrow money from your 401k. It's different than a margin loan. It's much different than that, but you can do it, okay? So, but any other kind of account though, other than having the margin loan, you're not gonna be able to borrow money from those other accounts. So if you wanna borrow money from your account, in your standard brokerage account, you can do a margin loan, and in your 401k, you can do a 401k loan, and that's pretty much it in terms of loans. Okay, let's talk about the strengths of each of these accounts. We just went over a lot of factors. I think we just covered over 10 different factors there, guys. Okay, so strengths. With your standard brokerage account, taxable non-retirement brokerage account, its ultimate strength, in my opinion, is the ultimate account for flexibility. You're not restricted on when you take the money out. You can invest however much you want into it. You can invest in whatever type of investments or whatever way you want. You can borrow money using margin loans. So you have unlimited flexibility within a taxable standard brokerage account. Within a traditional IRA, I would say its main strength is that when you contribute money to it, you're gonna get a tax deduction on your tax return for how much you contributed that year. So with your traditional IRA, you get a tax deduction when you contribute money to it every single year, depending upon your overall income, age, and things like that. With your Roth IRA, I would say the main strength of a Roth IRA is that you get to pull the money out. When you eventually distribute money out of that account, the money comes out completely 100% tax-free. None of the other accounts can do that. With your 401k, its main strength, in my opinion, is that when you contribute money to it, you're deferring tax into a future year. So you're saving on your taxes in the year you contribute to your 401k. Plus, you can contribute a lot more to your 401k than you can a Roth IRA or traditional IRA. Those were the strengths of the accounts. Now let's talk about the weaknesses. What I find to be the major weakness of the standard brokerage account is its taxes. You don't get any tax advantages by investing within a standard brokerage account other than the fact that you can deduct losses. With your traditional IRA, I would say its main weakness is that when you take the money out later on, you don't get any favorable tax treatment. You have to pay taxes on that withdrawal at ordinary income rates, which is the same as your wages. Also, a weakness of the traditional IRA is that you can't take the money out whenever you want without facing the potential for penalties. So what's the weakness of the Roth IRA? Well, one of the main weaknesses of the Roth IRA is one, there's no tax deduction when you put money in because that money's already been taxed, so you get no deduction there. And you don't really have flexibility of when you can pull out the money. You can pull out contributions, but you can't pull out earnings. But generally speaking, you can't take the money out or with very limited capacity as much as you want until you're age 59 and a half or older, just like with the traditional IRA. So what about the weaknesses of the 401k? Well, first of all, I think taxes is a huge weakness of the 401k because just like the traditional IRA, when you eventually take money out of that account later on, you're going to pay taxes at ordinary income rates. There's no favorable capital gain rate treatment whatsoever. The other main weakness of the 401k, in my opinion, is that you have the potential to pay a lot of fees over the course of all those years when you're investing. For the plan administrative fees and fees to the brokerage companies, remember, because you're pretty much limited most of the time to mutual funds. You have some ETF or index options, but a lot of times people are just limited to mutual funds within those accounts. One last thing I forgot to mention as a strength for the 401k is that you do have the potential for an employer match. So you do have to keep all that in mind when you're choosing an investment account. So I just went over all those different rules as quickly as I possibly could for you guys. For myself personally, and if you follow my videos, you already know what kind of accounts I use. So my wife and I, we use a standard brokerage account. We use two Roth IRAs, and we each have our own 401k. So I do a mix of everything with the exception of a traditional IRA. I do not use a traditional IRA. I would much rather have money go where I don't get any tax deduction now, but later on have that money come out tax-free, which is why I like using Roth. Now, the main reason I use my 401k at work, if I'm being honest, is not for an employer match. I wish I got an employer match. I do get a profit sharing contribution into that account, which is kind of nice, but I don't get any dollar for dollar match of what I contribute, which is a major bummer. But one of the reasons I do utilize that account is to keep my wife and I's overall taxable income low so that we can still qualify to invest in a Roth IRA. That's part of the reason I use a 401k. The reason I use a standard brokerage account is one, I really like the flexibility of that account. And we have the potential to max out our 401ks, but I'm a person, I like having options, I like having flexibility. So I tend to use the brokerage account quite often as well. Even though it's taxable, it's still nice to know all that money in that account, it's completely liquid and I can access it whenever I want. So if there's a real estate deal that comes out or that comes up, then I can pull that account and take all that money out right then and there, and I have all that money at my disposal if I want to go buy a piece of real estate, which I might do someday, so we'll see. So that's part of the reason I have that account and why I use that account. All right, everybody, well, I'm going to wrap up the video here. Let me know what you think about all these different types of accounts. Which one do you use? Why do you use it? And what's your overall long-term strategy for using that account? If you're brand new to the channel, I just wanna say welcome. Here on Money and Life TV, our goal and mission is to help you become fiscally fit. And we do that by teaching finances, investing, taxes, and more on a regular basis. If you guys liked the video, make sure to drop a like before you leave. It really helps the channel out and get this information out to more and more people. And be sure to share this information with a friend, especially somebody who's thinking of investing soon and who you know doesn't know all these rules and doesn't know how these accounts work. I think they're gonna find this information very, very helpful. So please share that with them. With that being said, guys, I love you all. Thank you for all the support. I can't believe the channel is at over 16,000 subscribers now. It's unreal to me. It's absolutely unreal, but I'm having a blast doing this and interacting with all of you over YouTube. Have a wonderful week, and I'll see y'all out there. Live life uncaged. Peace.